The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
It's Policy Week at CoinDesk. The bipartisan stablecoin bill drafted by the House Financial Services Committee has been delayed a few times last year. Will the new Congress pick up their efforts in 2023? Joining us now to discuss is Katherine Dowling. She's a former federal prosecutor who now serves as general counsel and chief compliance officer at Bitwise Asset Management. Katherine, good morning. You've said recently that stablecoins will be a, quote, top priority for the Congress, and Circle CEO Jeremy Lair echoed that stablecoins are the lowest hanging fruit in the regulatory framework. So how soon will we see some action here? We've got a new House Speaker in Kevin McCarthy at the House.
Well, good morning and nice to be back. Thank you. And it's a great question. I think we are going to see renewed interest in stablecoin legislation with the new Congress. We've already seen some very positive statements coming out of the House Financial Services Committee with Representative McHenry. We know that last year we had a lot of different bills dropping. We were looking for some definitions. So we had some great momentum moving into the end of the year. Then we had the FTX issue. And now there's renewed interest to make stablecoin the first piece of the legislative puzzle. And why? Because regardless of whether you are pro or con on crypto in Congress, there's a sense among a number of members of Congress that something must be done. And stablecoin is the first piece because it's a narrower issue. It's something that you can get your arms around a little bit better than the larger, meatier issue of general crypto market structure. So I see that as the first out, and I think we're going to see some renewed interest, especially when you look at the new digital assets and financial technology and inclusion subcommittee chaired by French Hill. So that's also another positive movement in the right direction.
You say it's a narrow thing, but that's because one of the reasons why you have all this interest, of course, is it's the bridge, if you will, between traditional finance and crypto. And it's also the source of a lot of controversy in terms of backing, et cetera. What would this piece of legislation mean for the stablecoin issuers? Are they going to be more reluctant to issue stablecoins? Is it who's going to fall by the wayside and who isn't? Who's going to survive? What do you think the ultimate picture will look like 6 months to a year after such legislation is passed?
It's a great question, but I think it's going to be a big positive. There's just been so much doubt and uncertainty around so many aspects of the crypto industry. So having some clear rules of the road and rebuilding the trust is going to be imperative. And this is one of those first steps that will get us moving in that direction. You're going to see one-to-one backing. You're going to see no leverage. And then there's going to be some bipartisan compromise around how the rest of the bill will take shape and take momentum. But I think it's going to be a big positive to get pen to paper and some movement here in this first piece of the legislative puzzle.
And do you think some players will be shaken out?
I think you're always going to see some shakeout. At the same time, you can also see the folks embrace what the new definition will look like, embrace what the new process is going to look like. There's a lot of momentum for stablecoin to be able to be issued by both depository, non-depository. That's a positive. So, and if you look back, 6 to 9 months ago, that was not the way the momentum was moving. So I think that's a positive for a larger number of players, the innovators who created this in the first instance. So it's good that we're not seeing a shutout in that regard. So less shakeout than we would have seen if we looked at this at its first advent.
How would they regulate stablecoin issuers who are just not based in the United States or try to avoid and distance themselves from U.S. jurisdictions?
Like someone in the Bahamas.
Well, this is the issue. If we start with our regulatory foundations, we can then increase the dialogue so that we make sure that on a global level, everyone's part of the conversation, because you're absolutely right. You have to worry about what's happening off U.S. shores. And that was, that's a big crux of the movement and the momentum that we are seeing in Congress to get better rules of the road here, because the more we have confusion and we don't have rules of the road stateside, the more we push businesses and innovators offshores. And then we do have less control over those functions and having U.S. investors and global investors subject to offshore companies that aren't going to be as regulated as we move towards a more regulated environment for crypto.
And do you think those offshore companies will be able to survive this kind of thing? In other words, is there a way? Is there ultimately a way for them to grab them? I guess getting to Christine's question, is there ultimately a way for them to be dismantled, even, or is it just going to be a two-tiered system, the offshores and the onshores?
I think in the short term, it's exactly that. We're going to see a two-tiered system. And I think as we rebuild the trust, as I was saying, and get more of the rules of the road for the onshore companies, I think we create a much better environment and we give a market for folks who want to get in, but want to do so safely as they come back into the water, so to speak, after the FTX debacle.
Or even a three-tier system. Where do you see a digital dollar falling in the, I guess, play here with the private stablecoins?
Well, that's always been a big debate and a big question. I think we've got experiments, we've got global experiments with how that would work. I think you have the privacy concerns. You're going to have a lot of pressure from privacy concerns around those aspects of this debate that's been going on. But I think the stablecoin is just a better solution to kind of push through concerns around privacy.
So Financial Services Chair Patrick McHenry is also creating a subcommittee that oversees the crypto industry. What do you think is the significance of this subcommittee, and do you foresee regulating crypto as a bipartisan effort?
I think it's a great development. We have the House Financial Services Committee, Digital Assets, Financial Technology, and Inclusion. It's a mouthful, but the goals, as stated, would be to provide clear rules of the road among the federal regulators for the digital asset ecosystem. And that is the goal that has been stated. And it's so important that we're getting these public statements, that there's a commitment to move forward. And that's where I'm getting the sense of the energy and the momentum that we'll get some legislation this year on first stablecoin and then moving on to the more complex and meatier issues of overall crypto market structure.
Yeah, I along those lines, I mean, obviously, we haven't said those three letters enough in this segment. FTX, that's looming over everybody's head. Do you think that this is going to necessarily be the sort of change that, will it be the catalyst to change and get more and get harsher crypto regulations than we otherwise would have seen had this not happened? Or do you think that there's been a general consensus in Congress as to how the market should be regulated?
I think, as you saw last year, the momentum was moving towards getting legislation out there. So with FTX, will there be harsher regulation and legislation? I don't think so. I think it just provides a real-world example of what can happen when you don't have legislation. We were talking about offshore, onshore, and FTX is offshore. And perhaps a lot of what occurred could have been avoided had we had all of FTX onshore and subject to regulations and subject to U.S. laws that would have potentially avoided the commingling and misappropriation. But FTX is fraud. It's not specific to crypto fraud. It's misappropriation of customer funds. And that we can avoid situations like that if we have more disclosure, if we have more transparency into what's happening inside the business. And you're going to see more action around the outside on third-party cases looking at what type of diligence was or was not done for investors in FTX. Were they poking the tires enough when they were investing their clients' funds and their investors' funds in the business? Who should have seen what happened? Shouldn't happen to begin with, of course, but then once you have additional investors spilling in, were they doing the work that they should have been doing to make sure that you had solvency and that there was some there in the investment they were making? So I think you're going to see some more cases around that and some more suits around finding who's to blame for the lack of diligence that was occurring.